The market looks like it wants to take a breather going into the election week. Why is that? Stimulus, or lack thereof, is definitely taking a toll on the market. Jobless claims continue to go down, and GDP was up 33% today. How do you trade this market? Let the market come to you. Welcome to our YouTube channel. My name is Glenn Tompkins Jr., Senior Instructor here at VectorVest. If you can hear me, by all means, please respond with the appropriate response of VV Nation. Let's see who's out there today. A lot of people in the room right now. I wonder if my alert went out. I wonder. Oh, I don't know. I think it should have. Today is going to be an exciting day about learning how to use the power of the VectorVest software. I've got a little segment today called Rising Industries. I'm going to show you how, as a subscriber to the VectorVest software, you can find what industries are rising right now, whether the market is bullish or whether the market is bearish. No matter what it is, I'm going to show you how to use the software to find out what industries are rising the most at any given time. And if you are a subscriber to the VectorVest software, whether it is a long-time subscription or even just a trial, I'm going to show you how to do that. So now, for any of you who are not even a trial subscriber to the software, we are offering here on YouTube for VV Nation a trial to the software for 99 cents. 99 cents. Joey will put a Glenn, and we'll put a link in the chat for that special 99 cent. If you have to click on that link. All right, so let's get started. Like I was saying a moment ago, this week I'm going to show you how to utilize the VectorVest system specifically for knowing what industries are rising at any given time, whether the market is good, bad, or indifferent. So that is going to be a little segment this week called Rising Industries. It's going to probably be my second story for today because I sent out my alert today for people to know that we will be talking about how to find rising industries. All right, so the VV Nations are coming up. I have my Cafe Bustelo. We can hear you. I'm drinking my Cafe Bustelo as well in my Starbucks cup. See, I got my little Starbucks cup today. Normally, I have either my Duke cup, I think Joey, or my Michigan cup. All right, go blue. There you go, go blue. All right, hey, the Big Ten started playing already, so it said starting last week. Let's get into what we're going to cover today. All right. We always start off with what's going on in the market because that's important. You guys, as investors in the market, need to know how to trade the ongoing market, what's going on. So I always start off with stories talking about what the market's doing, what makes the market do what it's do. So I'm going to jump straight in. Where's my mouse, Joey? OMG. There it is. I'm going to jump into my first story, and Joey's going to switch this over. Let's talk about what things are moving in the market right now. You notice I didn't even go over the homepage today. I'm going to go straight into what the market is, and then we'll look at the homepage, all right? U.S. durable good orders rose for the 5th consecutive month in September. Interesting thing about these stories is it's all about recovery. It's all about recovery from COVID-19. Not only that, but if there is going to be a stimulus, and it doesn't look like it's going to be a stimulus coming into the election. Looks like it's going to be after the election before any kind of stimulus is going to be voted on. What else is moving the market? Interestingly, I don't like to mix politics in with the market, but we did get the confirmation of our newest Supreme Court justice. All right, so those are the things that help to put some, what's a good word I want to use? Solidifying what the market is doing, give the market some semblance of normalcy. I think we're still far from a level of normalcy, but the market doesn't like indecision. The market doesn't like any kind of things that put the market not at ease. So the market is going through the gyrations of up one day, down one day, up one day, down one day until we get to the election. The election is going to be a big factor of what's going to move the market. Clarity, that's a good word. I like stability. I like clarity, those things. And without that, the market's going to show you that it doesn't like it because the market will be up one day and down the next day. But U.S. durable goods orders rose for the 5th consecutive month in September. It goes to show that due to COVID-19, recovery is kicking in. Another side of this story is I've seen stories about the European market or the European countries might be reverting back to some closures due to the rise of COVID-19. I think if we do that again, our market is going to feel the effect of that. All right, so I think that the existing situation is going to be, or the existing administration is going to do everything it can to not put us back into that situation. So durable good orders rising is good for recovery. My next story is economy recovered significant ground in record third quarter GDP rebound. The gross domestic product is huge. Jump in output follows steep drop early in pandemic. Still, analysts project the economy will end 2020 smaller than a year earlier. All right, with COVID-19, I think that we will be lower than we were a year, but I think a rebound coming off of COVID-19 just goes to show how resilient we can be if as a country, we pull together all of our abilities to get out of get out of bad situations. All right, the economy grew to a record pace in the third quarter, increasing 7.4% over the prior quarter at 33% annual rate. That's huge. Now, we're still below the pre-COVID values, but that's still a big jump in one quarter, recovering about 2/3. How about that? 2/3 of the ground it lost earlier in the coronavirus pandemic. The market is definitely trying to come back. I like that idea of thinking about buying a straddle for the election. And I would put a straddle on one of the major indices, the Dow, the NASDAQ, or the S&P. Pretty much, I would do it on the S&P because it tracks 500 stocks. If I'm going to do a straddle, I'd probably do it on the S&P. All right, that may not be a bad play because one of those legs are going to work. And better yet, if you want to play it from a less expensive way, put a strangle on the S&P. Now, after the election, you got to feel that the market's going to move bigly or bigly in one way or the other. All right, so I would play the strangle because it's cheaper and it creates a base on the graph. It looks sort of like this, whereas if I'm looking at a straddle, it looks like that. But the base on the bottom of a strangle means that the stock's price can stay anyway down here, but it's really got to move one way or the other. So that is something that I would consider. I like that idea, Marie. I really do like that. What I'm trying to say, huh? That idea. Thank you. That idea. And the last story is about the GDP again, 33% in quarter three, better than expected. I think it was expected to go up 31. We went up 33, so it wasn't much higher than anticipated. So yes, I like the bump up. It wasn't way out of line for what the anticipation was. The anticipation was that it was going to be about 31. It finished a couple of percents higher. All right, that's better than 32% from the Dow Jones Economist survey. All right, so GDP is a good thing, shows recovery. So now let's take all of that information. Now let's go back into the VectorVest software. And here are the stocks that I will be talking about today. And I always look at two stocks or two ways of analyzing the market to determine what's going on and how to take advantage of the market. The news stories talk about what's going on and what's moving the market. And then I'll look at two graphs. If you're a VectorVest subscriber, I'll look at the VVC. The VVC is an indexed arithmetic average of all of the stocks that we track. We currently track over 8,300 stocks. We feel that it is a better representation of the broad market movement. But for those of you who are not VectorVest subscribers, I'll look at the S&P 500 or the SPY. So I'm going to bring up the VVC. I'm going to bring up the SPY. These are the two that we look at graphically to track what's going on in the market. I will right-click. I will view the stock graph. All right. I like to always look at a 3-month graph, and I like to put on a 20-day exponential moving average for the more of the medium-term investor to keep a good eye as to what's going on in the market. Here is the VVC, the VectorVest Composite, due to the news of everything that's going on, coming off of this high. Let's go put that up here. Coming off of this high that happened on 10/14 of 2020, the market's pulled back. It pulled back enough that it fell below that 20-day exponential moving average. General rule of thumb, when looking at any indice on an ongoing basis for market timing, Above the 20-day exponential moving average is a good time to be in the market. Below the exponential moving average, a good time not to be in the market. Currently, we are at a level where we should not be in the market below the 20-day exponential moving average. Nice rebound today. Nice rebound today, but one day doesn't make a trend. So what does this mean? Keep your eye on the market. Let's see as we get closer and closer to election if that has some legs to keep moving up. I'd look at being more bullish in the market once the VVC crosses above that 20-day exponential moving average, and RT, which looks at the short-term price trend of the market, goes back above 1. Let's go take this to the S&P 500. Same kind of scenario. Notice that the graphs look very similar, but remember, the S&P only tracks 500 stocks, where the VVC tracks the movement of over 8,000 stocks. Currently below its 20-day exponential moving average. Nice rebound today. Nice open candle, but still below the 20-day exponential moving average. And that relative timing indicator is still below the value of 1 at this particular point in time. So again, even from the market timing perspective of the spiders, I'd wait to see if we can go above that 20-day exponential moving average and RT go back above 1. So we looked at what's going on with the market by way of news. Do I want to close this? I think I'll close this. Let's go back to the home page real quick. All right, and let's go take a glance at what you see once you open up the software. We track 8,379 stocks. Here's all of the major indices are up nicely today, a nice rebound from yesterday. No one can see what? What did you do? Stop breaking up stuff. Will you stop touching stuff?
Sure.
All right. So as I look, all of the major indices are up today. Here's our color guard. We use it like a traffic light into the market. With that, all three colors being represented, the market's having a hard time determining a real true direction in the market. This is a trader's market. You play the up days on the up days. You play the down days on the down days. If you're a longer-term investor, you sit on your hands and wait for the market to come to you. That's my guidance based upon the VectorVest software right now. If you're a longer-term investor and you got your hands in your pocket, leave them there. I leave them there. If you're still investing in stocks, let your stops manage the trades that you're currently in. All right. Before I move on to my next story, do we have any questions? While I am asking for the questions, please remember, if you're not already subscribed to the channel, please do so. Hit the subscribe button at the bottom of this video. Comment and like as well. Let's see how many likes we can get today. But hit the comment button, hit the like button, follow us. If you want to follow us here on YouTube, by all means, please do so. Take advantage of a trial, 99 cents to get you this kind of information every single day. All right, any questions? Somebody says I like pins. Well, we're going to take a look at pins today. It's in my list of stocks to look at. Today, I am green light buyer, short-term, even day trade if it hits my target. And you know something? As I mentioned, Marie, this is a trader's market right now. You take advantage of the up days on the up days, the down days on the down days. If that's not your way of trading, sit on your hands. Sit on your hands. What do you consider as a long-term versus traders? A long-term investor, in my opinion, is somebody who's trying to stay in stocks couple of weeks at a time. Green light buyer, as Marie talked about, is a good way to do that. Looking at any of our market timing signals like the DEW, primary wave, confirm call, all of those signals can get you into the market at the right time. As a trader, though, I'm looking for the primary wave. That's good for the shorter-term trader. If I'm looking to be a longer-term investor, I look at something like the DEW. Hopefully that helps you out, Aaron. We have 7 different market timing signals to accommodate any type of investor in the market. I have puts on the Dow and the UVixy. Why, if the contras go up, I will take profit on them. If the market, you have puts on the Dow and the UVixy. All right, so that means you're playing them to the downside. Today is an update, though, right? Remember, one day is not a trend, but if you're playing the market to the downside, the market's moving up, just tighten the stops because you don't know. What if the market goes up again tomorrow? Then you're incurring bigger losses on those puts. So just keep that in mind. Keep that in mind. Looks like that's all of the questions that have come up. I don't want to sell my contras because one day will not change the downside. I agree with that. So, when we looked at the graph, we go back to the graphs. When we looked at the graphs, what did I say? I viewed the stock graph on both of them. They're both still moving down, and they're below the 20-day exponential moving average. But, Marie, if the market starts to bounce up, what's going to happen to those puts and to those contras? They're going to both start losing money. All right, all I'm giving you is the wherewithal to watch the markets trend to manage your trades properly. Hey, if you like this content, guess what? You can join us live every Thursday at 2 p.m. here on YouTube. Join VV Nation. We hope to see you there.